Welcome to the Trading Room Mavericks. This is Rob Reinhold, and we are getting into June monthly options exercises. So on Friday, all monthly options will expire. So let's jump into it. In this session, we're going to go through the news of the week. We're going to talk about what happened. Lots of geopolitical stuff this week, and I've got some setups for you, but we're not looking to get real heavy here at this point.
All trades and analysis in this video are for professional traders only. This video has been released to the public after a delay required by our compliance department. Maverick traders receive this market recap immediately, along with real-time trading support and resources. Maverick Trading is a proprietary trading firm that backs professional stock and options traders with firm capital. Our traders keep 70 to 80% of the profits they generate. If you're ready to become a professional trader, click the apply link in the video description below. Let's break down what happened in the markets today.
All right, let's take a look at last week's news. We were bullish overall. We were moving closer to all-time highs. We were within about 1.1% of new all-time highs, and the sentiment was there. Anytime we got a pullback, the pullback was bought very strongly. Bull pullbacks, high bases, and we had this really nice advanced decline line where it was really spread out across the market, not just concentrated in the Magnificent Seven. Everything was looking pretty bullish. It wasn't runaway bull market, but then we got some geopolitical news on Thursday night that really changed a lot of things. We had Israel attack Iran on Thursday night. Iran responded by attacking Israel on Friday. This is a major escalation by two really major powers, and this definitely spooked the market. What we saw overnight, we saw oil spike like 15%. We saw gold spike. We saw the euro spike, and that's what's a little bit different this time. Typically, the safe haven currencies have been the yen or the dollar. They actually both fell after that news came out, and we saw the euro and the Swiss franc spike up. So it's just the world is a little different now where people are going to get out of the way of risk, and right now, that's where they're running to. To sum up last week, it was a really quiet early June week that got exciting on Thursday night because of geopolitical tensions. We're going into the weekend. We have no idea what's going to happen over the weekend. We have no idea where the market's going to open up on Monday. So this trading room, I'm going to be talking about a few scenarios that might happen. Let's finish up on last week. We had really weak CPI and PPI. So the CPI came out well below expectations, 0.1 on the core when it's supposed to be 0.3. And then we got the PPI that came in below expectations as well. Remember, last month, the PPI was negative. This is a signal that the Fed is likely going to cut rates before expected. Remember, this Fed rate cut has been pushed out and out and out. And I actually thought if you would have asked me 2 months ago, I would have said we're probably getting one rate cut in the fall and that's it. I now think that the summer rate cut is definitely on the table. We have a Fed meeting this week. It's not going to happen this week, but I think they might set up either next meeting or the meeting after that for the first rate cut of the year. On Friday, we did get consumer sentiment that ended up being better than expected. This is what we've been seeing. Consumer sentiment has rebounded over the past 2 months, telling us that the consumer is still at least okay with where the economy is at the moment. So the numbers for the week was that the Dow was down 1.37%. Now that is mostly due to Boeing. Boeing had an aircraft that crashed in India, killing everyone, not everyone aboard, but it was a real disaster, and that's mostly why we saw the Dow Jones down. When we strip that out, we take a look at the S&P and the Qs. This was barely down. And remember, we had a big down day on Friday. So on Thursday, the market was up probably 0.5%, 0.75% for the week. And then this is all the damage that happened on Friday. Russell took a hit. Take a look at gold and oil. I mean, the charts on gold, really strong here. Oil, really strong. This is where people are running and hiding in this market. Taking a look at equities. Now, everything I just talked about is what I call cocktail talk, meaning it's fun to talk about the news, the headlines. I sprinkle in a little bit my opinion in there, but the charts are the charts. And I love to say this. If you woke up from a coma, you've been in a coma for 10 years, and the first thing you did was you had to make a trade on this chart. You don't know what just happened. You have no idea who the president is. You have no idea of anything that's going on. And you looked at this chart, what would you do? And this is what I would say. I'd say, well, okay, we just broke out of a support level. We're pulling back to this level. We should get a bounce somewhere around this level, somewhere around this 20-day moving average. I'm looking to be a buyer off of this bounce because likely to see some new highs. I have no idea what's going to happen. Nobody does. But on pure technicals, this is the setup. And what happens is we are human beings and we read things and we learn things and we have feelings. And they cause us to deviate from what the chart is saying. Here's what I've learned over 27, 28 years of doing this. Trust the charts. Do not trust your feelings, your thoughts, your opinions, your anything. Trust the charts. I have no idea what is going to happen with this conflict. I have no idea that we might get big red candles and just fall apart from here. I have no idea. Here's what I do know. When I trust charting principles, most of the time I'm pretty happy with the results because that's how charting works. It's statistics. If you know it's going to be 7 out of 10 times and you pick it every single time, you're going to be happy after 10 times. And that's what I'm saying here is that I know everything is scary. I know there's a lot of news being out there. And yes, things could escalate over the weekend. But at this point, you have to say this is a bull pullback and a great opportunity to get more long. I know that's crazy to say. I hear myself saying it and I'm like, well, that is reckless to tell people, Rob. Why would you say that out loud to people? There's all these reasons to be fearful. I've learned that when I trust the charts and not my opinion, I do a lot better. Bull pullback on the NASDAQ. Give me some reversal candles here. Give me some green candles. I think it's time to get even more bullish here. I know it's crazy to say that. Look, I think it's crazy. I could give you all the reasons why I'm stupid and why it's a crazy thing to say. But the charts are the charts, and I only trade the charts now. Here's the heat map. You can see a couple of spots of green, but mostly just a mild down week overall. Let's talk about this week's event. I've been talking about how the first 2 weeks of June are low volatility. Well, that got shattered on Thursday. So we now have geopolitical news in the market. And we are now coming up to some of the tariff deadlines. Remember, we extended tariffs for 90 days. That ends up being right around the 1st of July. We've got 2 weeks going into this to where we could be staring at tariffs again. Remember what happened last time with tariffs? It was ugly. I think the end of low volatility is over. I think we're going to start to see some volatility, some movement, and some intraday swings happen a lot more than we've been seeing. So that quiet market I've been talking about for the last 2 weeks, I think you can close the book on that. And I think we're about to get a louder, noisier, choppier market with lots of movement based on news. That being said, most markets are range bound. Equities are slightly bullish. Bonds are definitely sideways. Forex is pinned into channels. Commodities, other than gold and oil, they're all just hanging out. So we'll have to see what happens here. I think this week things either really break out and everything changes, or we go back to, hey, this is a churning higher bullish market where we're going to go approach those all-time highs and most likely break out. On Thursday, the markets are closed for the Juneteenth holiday. Friday will be a normal day, and remember, that is monthly options exercision. Next week, I talked about the Fed meeting. So we have a Fed meeting on Wednesday. They are not expected to make any change, but I think they are going to give some hints to a rate cut. I do think the data warrants a rate cut, especially that inflation number. Retail sales on Tuesday. This is going to give us how strong the consumer is. Looking at the core, 0.2, that's a decent number. It comes out at 0.2. Everyone's going to be just fine with where the economy is at the moment. We are at a +3. We are still at a +3. I know that there's lots of things to be scared of. I know there's lots of things to say this could go bad. And guess what? They totally could go bad. All that stuff could absolutely happen. But remember, we're not betting on this moment in time. We're betting on the next 100 moments of time. And we know that if we bet a certain way, the history has shown that we're going to be very happy with those bets over 100 trades. This is a bull pullback. I know it's crazy to say, but this is a bull pullback. So let's go look at the sectors. Let's go see where some of that relative strength is hiding in this market. Taking a look at last week's results, first thing that jumps at you is energy. Energy went from a -1 to a +2, maybe a 0 to a +2, I can't remember, but it had a big jump. I'm actually distrustful of this because this is where energy is just going to be crazy. We know that there's going to be volatility in the sector. And based on geopolitical news that we have no control of, and not just control of, but we have no way of knowing when it's coming, this is what we call an unknown unknown. We have known unknowns, like, hey, what is the Fed going to say on Wednesday? We know on Wednesday they're going to say something, and we know the exact time they're going to say something. This, we have no idea. This is where I try to avoid these because this is truly random. Just random, crazy trading. So for me, energy, where it does look like it is going to make a run, I don't care. I'm not going to play any part in it. We'll talk about that later when we get to the slots. Everything else you can see, healthcare went from one of the weakest sectors to now it's one of the best performing sectors. But take a look at healthcare, real estate, utilities, consumer. Utilities, real estate, and healthcare are generally defensive sectors. You would expect them to do better when the market goes down. Consumer also did well. So I'm going to be hunting in consumer for some longs. And you can see industrials, financials, they took the biggest hit this week. Let's go through the scores and let's see what changed. Utilities was at a +2 last week. We're at a +2 this week. It looks okay. It's not great. It looks mildly bullish. Coming over to communication services, it was at a +3. You can see we are back down to that 20-day moving average. So we're just going to back it down to a +2, but still bullish on comm services. Real estate, we're at a 0. We're going to stay to 0. We just really haven't broken out of anything yet. Until we break out, we're just going to stick here with a 0 with this moving averages being flat. Healthcare has moved from a -3 back here. It's worked its way up to a -2, then to a -1, then to a 0, and all of a sudden, look at that. It's worked its way into a +1. This is a sector that I think you can start looking at being bullish at this point, after it being really the worst sector for this year. Industrials, which I really liked. I really liked industrials. I didn't love this pullback this week. Remember, we were up for the first 4 days of the week, not this sector. This sector sold off every single day. I don't love that. It underperformed the market quite a bit this week. Speaking of underperformance, take a look at financials. Financials, we went from, being a +2 to a 0. Really nasty fall here. So financials to me is the one that really fell apart the most this week. Here is the consumer sector. You can see up the first 2 days. This little dark cloud cover here. And then we drop back down, but this drop, 2 green candles. There was more buyers and sellers on both of these days. It was just the gap that made it go down. To me, this has still got some buying to it. It's a +1. I'm going to take a look at some trades in that sector. Here we have consumer staples. It was a 0, stays a 0. You can see it's definitely not going anywhere as far as the trend goes. Moving on to technology, was a +3. This is what we like to see. The first 4 days, they were almost all up days. Wednesday, a little down day, but closed off the low. And Friday, there wasn't heavy selling on Friday. There was a red candle, but not a heavy selling day, showing you that people still want to go acquire some technology stuff. So +3 is the one that stays. Materials was a +2. We're going to keep it as a +2 back down to the 20-day moving average. But it made a new swing high. We like that, made a new swing high. We're having a pullback, just waiting for that opportunity on materials. And energy, I'm going to just talk about, we were really stuck in this area here. And yes, we broke out on Friday on some big news, and this is probably some people buying into that news. I want to see if it holds. I am not going to be playing at all in energy because I think this is going to be a difficult trade. I think you're going to be up a lot, down a lot during a trade. And if you are holding till expiration, it's just going to be, a random guess on where it is on that one day. Whatever news happened that one day, hopefully you get lucky. Here are these sectors that move down. We had 4 sectors move down, and we had 2 sectors move higher. As you can see, technology is the lone number 3. And then we've got 6 sectors at +2, and then we've got our mild underperformers at that. Let's go into our slots here. We had 4 trades drop off. We had a utilities in NRG. That was a max loss. We also had a max loss in Halliburton. Halliburton got a big spike from this news. And then we had some small gains here. So overall, not a great week, but we still got lots of trades working. We have a market score of 3, so we're going to stay with this allocation. Let's see where we can go fill some slots. I really like this methodology because you do still have some discretion. As you can see here, I said, I don't want to mess with energy. I think you could flip a coin and probably do better than I could pick an energy at the moment. So I'm just not going to do energy at all. I really wanted to do a utilities trade, but there's not a lot of stocks available in utilities, and there's not a lot of stocks that have weekly options. We now have 1 week until the June options, and now we have 5 weeks until the July options. It's way too long for me. I don't play 5-week options trades. So for me, I just couldn't find anything in utilities that worked. So I actually had to go fill another sector. We are looking to fill healthcare. I've already got a -1 in healthcare. I'm going to go to a +1 here. So we got 2 trades in the same sector. Financial, I'm going to be bearish, -1. I don't like how financials fell apart this week. So if there is any more downside, I'm looking to be in financials. Comm services or consumer staples, we've been neutral forever on this one. We've just been ringing the register trade after trade after trade. So we're just going to throw another sideways in there. And then materials, I'm going with a +2 trade. Let's go in and take a look at some of those trades. Not a lot of trades I'm putting on. I'm not looking to get super aggressive here. Just looking to add in some and just see where this market goes. In healthcare, this here is Bridge Bio. I really like this chart. I love high bases. I love when a stock goes from 32 to 40 and no one wants to sell. Look at that. No one is selling. Gapping down, going higher. Gapping down, going higher. We had 3 days. Gap down, close near the high. Gap down, close near the high. Gap down, close near the high. It's just a great pattern here. It's telling me that it wants to break to the upside. Remember, I'm only looking to be a +1. So for me, this only has monthly options as well. The only trade that will work is a diagonal call spread. I love diagonal call spreads in this situation. One of my favorite trades has been do a longer term option, 5-6 weeks out, sell the weekly option against it, hold it for a week as a test out to see, hey, do I like this trade? And then at the end of the week, either let that 40 expire and hold straight calls or buy back that 40 and hold the straight calls. If I like where this is going by the end of this week, I'm going to buy back those 40 calls because I think the run higher is going to be fairly substantial. And I'd love to take this +1 and turn it into a +3 if it looks really good. Now, I also have the ability to turn it into a vertical spread. So let's say that it looks okay, but I don't want to be +3. I got to always sell the July 18th 4250 call and just turn it into a straight vertical spread, 50-50, 1-to-1 risk reward. And I could do that. Lots of things you can do with this. Really big fan of diagonal call spreads. Moving into financials next, I wanted to be bearish here. It was tough for me to find something I really love bearish, but this is the one I found, is that Apollo. It's just hanging out in this area. And I think it's going to go a little bit lower. And I'm not asking it to go too low. I only want to be a -1 on this. And a -1 is, hey, I want it to stay where it is or go down. So that's exactly what I'm going to do. I'm looking at the June 27th, 134, 131. So basically, if it's below the box, it's a nice gain. If it's above the box, it's a loss, and you move on to the next one. I'm not asking this thing to break down and fall all the way down to 100. I just don't think it's going to be moving higher here in the next 2 weeks. Let's go into that consumer staples. We've been in a zero for a long time, and you can see a lot of the stocks in this sector is doing the exact same thing. Here is Coca-Cola. Ultimately, we got a range of 69 to 74. All right, so the midpoint of that is 71.50. So we got to choose a midpoint. Do we choose 71? Do we choose 70? Do we choose 72? We have to pick the midpoint that we think it's going to be at on the date of the expiration. I'm looking to go out 2 weeks. I'm looking to be slightly bearish on this. I'm going to go a little bit bearish on this, meaning that I think there's actually drifts a little bit lower. The sector looks a little bit weak, so I'm looking to make this one as a slightly bearish butterfly in the consumer staples sector. And then the last trade and most bullish trade is in the materials sector, and this is KGC, Kinross Gold. This is just a really nice ascending triangle pattern. It's been doing this now for about 2.5, 3 months, and the candles are starting to look like they're breaking out nicely. We haven't broken out yet, but I'm going to give this trade plenty of time to break out. I'm looking to do the 2 weeks away, the June 27th, 15-17. 15 to 17 bull call spread. You're going to pay about 80 cents for a $1.20 upside. I like the risk reward on this one. So in conclusion, the low volatility period is over, shattered by a geopolitical conflict. Yes, it's going to be wild here. I want to make one caveat for my bullishness in the face of some really ugly news and news that none of us like to hear what happened this week. Anything can happen over the weekend. If ugly things happen over the weekend, Monday could be a bad day. And if Monday's a bad day, take everything I said about being bullish and trusting the charts and just put it to the side and say, hey, you know what? Things escalated quite a bit. We need to be more cautious. But let's say that there are a couple more strikes over the weekend and they decide, hey, we're going to calm down for a little bit and maybe we do some negotiations. The market is going to be very happy on Monday. It's going to be very happy on Monday. So I do want to say if Monday's an ugly day, then I think you can't go ahead and just get bullish. I think you got to wait and see what Monday's like. If Monday's fine, trust the charts. It's a bull pullback and you're going to be happy. Again, 7 out of 10 times when you make this trade. 3 out of 10 times you'll be sad. But again, we win this game through statistics, not through our brains. Everyone have a great weekend. Take care. Goodbye, everyone.